Hey everyone. So I wanted to show you an example of a change of character and a flip on a couple of different time frames. Now the market is fractal and the same thing happens on every time frame, whether it's monthly, weekly, daily, 12 hour, 4 hour. You can find the market doing the same thing on every time frame. Now, for the most part, we're going to be doing the majority of our analysis on the 4 hour and the 15 minute. If we look what we have here, you have a little bit of bullish momentum right now. Clearly, we had some bearish intent here. The order flow has shifted to bullish here. Now, if we just look at the way the market formed here, you can see how we have swept the lows, which is chalk bottom, and we have swept the highs, which is chalk top. So if that's our change of character complete, where is the actual flip zone? Well, this comes down to what kind of reaction we get in here. And to me, this would be the last form of supply here. Now, you could say this was the initial reaction point. We didn't really have a whole lot of interaction. There's really not a whole lot of places to pick from. But ultimately, what we can say is the same demand zone is responsible for taking out the reaction point. Sometimes there will be quite a bit more price action in there, and you'll have multiple different points to pick from. But we're essentially always looking for what caused the failure, what caused the flip. So this is your last point of control where supply had control. And this is where demand took control, broke through the supply. We look at this initial reaction and we're always looking at how this formed. Now, right away, what we can see here is we also have some inducement the market left behind, which is something to keep in mind for a later time. So if we just kind of play price forward a bit, you can see the market does its thing, and this will literally happen on any time frame. We'll go down a couple of time frames after just to show some more examples. But at this point, we're obviously very bullish. We have a strong low here, put in a new high. We've taken a couple runs at the high. We haven't actually taken it yet, but now you start building the story that you've taken all this liquidity, you have taken the inducement. So at this point, what we expect is this low to hold and these highs to go, because this is a strong low and these highs should in theory be weak. So as we play this forward, we'll usually see some sort of intention come up that'll show us something different. Let's actually go down time frames. And so this is the 4-hour demand that we're currently in. I'm just kind of play forward. So we have London's coming into the market. So as of right now, you could see that the market is further building liquidity down here. We can even mark it out. And liquidity comes usually in the shape of relatively equal highs or lows. So we'll just keep an eye on that. Just to while we're here too, just to show you some sort of an example of more flips. You could say we had a form of a supply here. Now, usually, like I said, 3 out of 5 times the market will go back to what took out the reaction point. That's about 3 out of 5 times. The other 2 out of 5 times, the market will return to the extreme. So here we could say we swept the lows, we swept the highs, so that's a change of character complete. Point of interest area 1 would be here, and point of interest area 2 would be here at the extreme. In this particular case, you can see the market came and reacted off the extreme. Whether or not you get a trade off of it or you end up breaking even on it, that's irrelevant. The point is just to make note of these changes of character. And we'll actually talk in the next section how to use this to properly get into a trade, how we manage, and we'll show a couple of different examples. But for right now, we're just going to play price forward. So right here, you swept all of the lows, so all of this liquidity's been wiped. On the 4 hour, we're very bullish. We expect this low to hold. This is also where the flip zone happened, where the chalk and flip on the 4 hour happened. We've wiped all the internal range liquidity completely. We've just taken the last bit of the lows. So in this case, we can start formulating the idea that maybe bullish order flow is to resume. But how do we know that we may want to go bullish? Well, we look for these little areas called change of character. So we have a supply here that gave us our last low, which is our 15 supply. With this in mind, we can see we swept the highs, we swept the lows here, and if we actually go down to execution time frames, we can see this in a little more detail. And you can see the change of character happens on multiple time frames. So let's look at this again. So you have a last form of supply. And you can test this on daily, weekly, 4 hour, it doesn't matter. It does similar stuff on every time frame. So you have a reaction point, which is somewhere around here. And I would also say the same zone is responsible for causing this supply failure as well. So if you wanted to take a trade from somewhere, this zone here would be a valid area to enter. Whether you want to take 50% or you want to enter on 25%. Myself, I usually use 25%. And this is basically how we form trade ideas. But everything comes from the change of character and the flips. And if you just wait for the market to do this, it'll happen more often than not. And it'll give you a cleaner setup instead of just rushing into every breaker structure that you have. So we could say here is change of character top. I should probably mark this one correctly while we're at it. Bottom, so you have your change of character. You basically once again sweep liquidity. You take the highs. We wiped the range completely on the 15 minute. So our expectation now is for price to go bullish. So in this particular case here, you would look at possibly executing. And this is 2.5 pips, which is a little large for Euro, but still not bad. You could probably even be a little more conservative and just take it down to 2 pips. But the idea is we've had changes of character and flips happen on multiple different time frames. We have momentum. And we have a trade idea that maybe this will be the area that we go off of. Now, I'll show several examples like this in detail, but you can see how powerful these changes of characters are. Now, as a near target, a lot of people would pay themselves here, which is totally fine. You could take something off the table. That's 13R. If you go back and you look at what you have going on, I would probably at a bare minimum look at paying myself here at 17R. But if we're really looking at the big picture, we could say these highs are weak as these highs failed to take this low. Now you have a bullish engulfing candle, which is showing you bullish momentum. The range has been wiped, so you would be smart. You'd pay yourself either here or here, because the market's never guaranteed, but you would leave a runner on to look for these highs as well. Now, this whole narrative comes from a change of character. There's really nothing here to stop us from running these highs. As you can see here, when price came down here, it didn't actually drop any real inducement. Price just kind of aggressively went down. We wiped the range. Because remember, for inducement, we want something like this, where the market drops something and essentially comes and gets it. And ultimately, we didn't get that here. We just had a straight push. On the bullish side of things, inducement would look like this, where the market goes up, you drop this inducement, you come back and get it, and in theory, this demand zone would hold. So on in this particular scenario, we didn't get that here. There was no inducement drop. It was just a straight push down. So we also failed to take this low. These highs are weak. We have our narrative for possibly running these highs. And we end up running these highs. Now, if you just held this to run these highs, this would have been a nice balmy 39R. Now, most people are a little more realistic, and we don't hope for the market to take these highs. We're smart enough to pay ourselves down here or down here. Somewhere on the way, you have to have a plan for paying yourself. But the idea is to show everybody that these changes of characters happen over and over and over, and ultimately what we get from these changes of character is trade ideas. And if you look at it on any time frame, this will likely line up over and over. So even here, as we go down and we look within the 15-minute, you have a change of character here as well, where you take the lows, you take the highs. You could say either the extreme did it, or you could say this zone did it. You know that one of these two zones is likely to play out for you. You have another flip zone here, where you could say there's a 15-minute supply that was in control here. You could say this doji took it. This next wick here actually mitigated the doji. So now, to me, this wick itself that mitigated the doji would become a POI. But you could see how everything is built from the same narrative over and over. We're always looking for that sweep down, sweep up. And this essentially happens over and over. Even right here, we have our last sort of a demand level where we take the highs, take the lows. You have a reaction point in here. And ultimately, we're looking at 2 points of interest again. You have what took out that reaction point, which to me would likely be something in here. And the next point's always the extreme, but you can see how these areas are great for building narrative. Now, this particular area is not in the middle of nowhere. We could look and actually tell you exactly what it's hitting. So we're hitting 4-hour sell to buy wicks here. What these are essentially is likely a supply zone on a 2-hour or 4-hour, even a 1-hour. And there's a 1-hour supply zone in here. For myself, if I can see sell to buy wicks like this, they're a point of interest to me. They do always get hit, so this is a valid supply zone, and we're basically always looking at where the market could react. So if you were in a long from here, you would be smart enough to pay yourself here. But the idea of all of this is just to show everyone how to use the changes of characters and the flips, and this will happen over and over, and you'll get a reaction from a flip zone pretty much every time. You can do this on any pair, on any time frame, and you can basically just look for this setup, sweep of the highs, sweep of the lows off a higher time frame POI. And usually what you'd find is if you went down on like the 1 minute, there would be another change of character inside this 15 order block as well that would pretty much look the exact same as the scenario here. Now we can show a couple more examples in the entries and the putting it all together concept. So we'll cut this video here as we'll go into flips and Chochs in a little more detail in the next videos to come here. But I would rewatch this multiple times, and I would basically be able to locate these changes of characters and flips in the market. They are literally the building blocks of a good trade. Anytime something has taken liquidity like we did here, then we break supply zone. If you can build a narrative of why price should go higher, in this case we have week 4-hour highs, and 4-hour and daily is bullish on this current pair right now, so we expect higher prices. So we'll cut this video here, and I will see you guys in the putting it all together videos.